This is Damon Stevens with Federal Village. Today is Wednesday, February 23rd, 2022. This is a stock market update for trades of the day. And boy, was it a bearish day today. So hopefully everybody took advantage of this downturn to short the market. If you didn't, then hopefully you stayed safe on the sidelines or was able to pull some profits. And, one of the things I hear, is that Bitcoin and the SPY and stocks don't travel together. They're totally independent and separate. But I tell you, when I was looking at the Bitcoin chart today and the SPY charts, boy, they awfully looked, very similar and traded very similar today. So, I know that more algorithms are being used for the cryptos, and computers are now driving a lot of that market. And I think you're seeing it right now. You can see where, very, very similar pattern today for Bitcoin and SPY. So I think you're going to see more and more these two kind of working together, and one's going to hopefully, help you with the other. So, if we see Bitcoin travel, moving one direction or another, maybe that'll help us with the stocks and vice versa. But when I pulled the charts up today, I just had to put a parallel across just so you could see how similar they are in trading. So just a item of interest. The other thing too is with all the changes that are going on, with all the things going on in the news, I think energies might be where we spend our attention. And you'll see that on the charts today. I put Fibonacci on. That's the colors, things you see here now, just so I can start to see where potential levels for support or resistance are going to be going forward, as volatile as this market is, especially with the market sell-off today. So just out of curiosity, give me some feedback on this. If it makes it too busy, let me know. But that's where Fibonacci helps you to understand, kind of where the market's stocks at. What are the bands of levels of price that you can look at, and where you can find support and resistance areas. The COP, you can see here that we pulled back a little bit. If the market continues the way it is, I think you're going to continue to see energy be a strength area. So hopefully we can see some continuation plays on those. This is another one. This is CVX. This is Chevron. Same area. You see that pulled back here, but it's above all the moving averages. So looking for a pop back up here above this 444.50 level here for right up here. If not, we have support down here around 124. Exxon Mobil, same thing, same category. You see a pullback here, staying above the moving averages, looking for a breakout above 80. If not, we have support down here at 72.50 that we should get some support on. GE, so looking at General Electric, looking at some other areas now that we typically haven't looked at, just because, if money's going to move, we got to move with the money. And so looking for, new opportunities. And I know that General Electric's my favorite. This is not a quick moving stock, but just looking for opportunities. So just kind of giving you a heads up of what I'll be looking for in the future here. So GE, I was just looking, this is just a big consolidation area. So not a lot of energy, a lot of momentum here. So GE probably will not be one that will trade long-term, but definitely going to be keeping my eye out on these energy or energy plays here. Just know that we're not financial advisors, so all your trades are your own. So just trade carefully out there. So Wednesday, eBay was the one to look at. So it didn't get much off of that as far as a play. Thursday, definitely going to be watching Thursday. So Thursday is the big day here. So you have Etsy, we have Nikola, we have Moderna, NCLH. So several ones that'll be playing out in the market tomorrow. So we'll be watching these in the morning for the ones that are open up here before the open, and then also looking at after the close. Friday, don't have a lot on my list here, actually none right now, but we'll still keep it open here just in case opportunities present themselves. So eBay, so here's eBay, and this is what I was talking about here. So you see here that we just kind of basically we came back down here, and you'll see tomorrow, but and after hours we came right down here to the support line here around around 52. I have it at 51, 53, but it's down here close to that 200 moving average, and found support there hopefully. So we'll see in the morning if it keeps that support level, or if it breaks down. If it does break down below the 200, then we'll be coming down here possibly to 47.50. If eBay if the market's positive at all tomorrow, which it wasn't today, maybe we can break up back towards, going 59.22, which is, where this 100 moving average is. But this is where the bands kind of can help you out. This is kind of our range now that we're playing in. First price. A donut, we're trying to see here after earnings if this is going to give us anything more. It did pull back here. It tried to rally up. It pulled back here. It's sitting here at 14.29. We have support down here at 13.84, but if it doesn't bounce off there, pretty much there's not a play here, probably, because if you look at here, this looks like a little bit of a channel. I could have a line here. So if this is just going to play in this range here, probably not a play here unless you want to scalp it. But we'll keep it on for the rest of this week. Qualcomm, you can see here, Qualcomm, this little bottom red band here as far as our Fibonacci. We broke down below it, our support line here, and we're where we were, back here in January. So you had 3 days here that we hit support. So I'm hoping this provides support. Very similar to this, you get a nice little bounce up here. So if we do, then, that creates, possibly a double bottom. It'd be a shallow double bottom right here because we came and hit it just, on the 14th of February. And so we're back there again. If it breaks down, then we're obviously coming down to 200, which is around this 156 range, and we'll be outside the Fibonacci bands. So this one's a little bit unknown area, so just be careful. We have a gap here to fill as well. So if we do continue breaking down in Qualcomm, we do have a gap to fill, around the 152 area. AZN. So AZN, it's been a strong stock, especially with the market, but it is being affected by it. I was hoping for a rally back up here to this top area here to this high of 64.21. And we had great momentum, but that momentum's kind of stalled out, and we pulled back here just below our support line here at 62. So we have a gap to fill down here, so it could fill this gap and possibly come back into this low zone area here. But hopefully we can get a bounce tomorrow. So we can get a bounce. If we get back above, 61, then maybe we can rally back up at least to 62. If we break below that 61.50 level, then we could be coming down to 59.65. And that's just this lower part of this band here. So that's what we're kind of looking at as far as price action and some of these ranges. And so hopefully this kind of helps you to kind of see where some of those thoughts come from as far as stocks in the ranges that we're hoping them to meet. Does come from a lot of Fibonacci levels and retracement levels that Fibonacci shows. So here, AVGO, we're looking to find support here and see, can we get a bounce off of here? Possibly. We're just below the 100 moving average, below my safety line here, which is at 568, which is the bottom of this Fibonacci area. So now we got this large zone down here below. So if we break and we don't get back above here in the morning, above this, 569 level, 570, we could possibly very well come down here to this 530 level, which is around the 200 moving average. So this is a long play down here. So just now that we broke support, just, be careful if you're trading this one. Make sure you're either getting above the levels and riding into, riding into this high area, which you can see we're kind of in a range here. Or, if not, if it continues to breaking down, then the 200's on our list. Amazon. So Amazon, you can see here, big pull down today. Boy, it really came down. If you caught this on the downward drop, we talked about support being around 3,000 mark, and we blew through that to 3,000 mark and we're down to just under 2,900. So big old sell off on Amazon today. It did break our level and then some, and what came down here. Now we're in this new zone here. So this zone is pretty much around 29.20 down to 28.35. So this could possibly be an area that we could play in now. If we have a continuation play tomorrow, if we have additional downside, we could come possibly down to this bottom Fibonacci, which is around 28.30. So just be careful there. If we can get back up here above this 2,900, maybe we can rally back up towards our support line. But as it stands right now, we've broken that, and so we're kind of right in the middle of this range. So just be careful with Amazon. We have a lower trend line clear down here around 2,500, 2,600. So Google, big old sell off down here. We were down there before. We bounced off of it yesterday, but today we came and we actually closed at the bottom of where we were yesterday and also where we were back in January. So we have hopefully support down here. You can see this lower candle, hopefully around this 2,500 range. We're not far away from it, about $50. If we can find that, maybe we can get a double bottom and bounce off of here. If not, then we're going to be in this la-la land, or this huge land down here where there's no pricing for a long time. So don't want to break this line here at 2,500, because otherwise I can't tell you where we're going to go, because we have a lot of gaps to fill, and we're beyond the Fibonacci retracements. So we'll see what happens. Apple pullback as well. So across the market, we're below our trend line here. You can see this trend line. So we're back in this range. We're just above this Fibonacci range here that starts just around 159 and goes down to 151. So do we come back into this range? It's possible. We had support 156.83 is where we were before. So if that can hold, or this 154.50 where we have our support line here, maybe we can bounce off of here. And basically maybe this would be a double bottom. So just something to watch for. And, is this a head and shoulders? It'd be a messy one if it was. I think this is more probably maybe a cup more than head and shoulders. I know some people have said there's a lot of head and shoulders out there, and it's possible, but this looks more like a cup to me, and hopefully a double bottom forming here soon. Boeing, down with the rest of them. We have support down here. It's a 188 level, so that hopefully can provide an ability to have a double bottom here and bounce off, get support. If not, our trend line is clear down here 175, so that would be quite a sell-off on Boeing. But we talked about this descending channel that we have here, and so obviously this is on the downside of that channel, and it could possibly come down here. You can see that we tagged it here in the past several places. So could we tag it again? It's possible. If the market continues down, 175 would be the next area. Tesla. So Tesla, we were in an upward, wedge here, our upward facing channel, broke out of that below it. We're below even our support lines here. So we talked about this in our video. If we get kind of below that 800, we could come a lot lower to 760, and that's almost exactly where we came to today, 760.04. So we talked about that in our video. The bottom of this is, right around 697 of this Fibonacci band. So we could very easily come down to that level. If we break down below that, then our next level takes us to 540. And so Tesla's in an area it hasn't been for a long time. If we look back here back here, this was October 2021, and this is September. So it's been a while since we down in this area. So just be careful on this one. Hopefully we can find support down here, at least at the bottom of Fibonacci. If we can get back above the 795 area, then hopefully we can rally back up, to 810, which would be the next range, and then back up from there. But right now we are below support, below major areas. So there could be a lot of downside to Tesla. Nvidia. So we talked about Nvidia. We're in this range. So maybe we come down here and tag this down here below where we were before, find support and bounce out of this. The range is getting tighter. We came to the top and we bounced down. Now we're back to our lower trend line. So we'll see if this provides support down here, down this 219 area, and hopefully we can bounce off that. But we did break down below the support, and we're down below all the moving averages. So Nvidia's in an area where we're definitely showing a lot of bearish momentum right now. Netflix, obviously below all of our moving averages, trend lines. We're down to almost the bottom of our last Fibonacci. So that's 340. We got a break here at 340. So if we can find support, hope we can bounce off of it. If not, we have a lot of space we can move. So we definitely want to find support down here. Hopefully we can don't go into a full-on bear market, which is very possible. But here's our support level, 335. We're at 367. If we can get back above here tomorrow, maybe we can rally it back up at least to over 400. Maybe 427 is where the 200 is at. So Facebook, we talked about all these gaps to fill down here. So we're still just sitting right on those lines. So if we can bounce off this 200 level, then maybe we can rally back up. We're right under 200. And usually if you see something under those whole numbers, I usually expect it's going to probably go lower. So maybe we do start to fill all these gaps, which is, a long way down for Facebook. It's really had a huge sell-off. You can see once it broke our Fibonacci, how far it was able to fall. I had a long way down. So, does that continue down? It's possible. A lot of weakness in the market right now. Not a lot of support for Facebook right now. If you haven't subscribed, please subscribe to our channel. Please like this video too if this is helping you to at least kind of plan your day out, plan your trading, and hopefully this will help you keep safe out there as well in this market. So 10-year bonds. So 10-year, you can see here, that was our top of our line here. We pulled back here. I like to see this. I like it. Like I said, I'd like to be below this 190 level. Trying to get down through there, but has not broke through there, but we're right at it. So maybe we can break down this next range. Would be nice. That would hopefully help the market a little bit here. So crude oil. So oil took off today. Broke right above, our upper trend line, broke above the highs. So, we tagged $97. So, if oil continues the way it is now and the market continues, maybe we go up to, 110, 120. Some people were talking about, oil at 150. I think it's possible, but definitely where the money's flowing right now. So, we are extended on this, and so we could have a little bit of a retracement, but right now, this consolidation we talked about, this is our breakout. So we close above that breakout. So hopefully we can create, a new channel up here. And you see here, this Fibonacci, that was the end. So that was our high. So we could create a whole new zone up here is what we're looking for. So we need at least a couple of days. I'd like to see a couple of days close above that 96 level. And if so, then we'll go ahead and get a new band up here, and I'll go ahead and update the Fibonacci to reflect this. So looking for a continuation play, towards 98, 99, and hopefully hold that for a couple days. The dollar's elevated a little bit, 96. So headed back towards our resistance areas around 97. And so we just kind of keep an eye on the dollar. Dollar's still below our highs here at 97, 41 or 44. So just something to keep an eye on, see if that dollar gets elevated. VIX, we talked about this. It's got a standard 32, but the market's still reacting to it. It's got to get down below that 20, 25 area if we want to see the market be able to pull back. So if we don't get a pullback, if it continues to maintain up here, we may have to continue downside. And like I said before, we had these spikes hit our upper trend line before, right? And this was back in, so do we hit it again? And if we do, I think we got, 15, 20% at least on the market, more likely 20% if we get up in this area. So really watching this resistance line we have here to see if it holds. Here's a SPY. SPY 420 is where we were at back in January, and we're right back and we tagged it again. So you can see on the Fibonacci here, this is all blue area, and I put these support lines in here. These are lines where I think the market could find support before we get down here in this red zone. This blue zone is pretty big too. And here's our lower trend line. So we broke the lower trend line, closed below it. I put the support line here at 420 because that's where we were at before. So hopefully we can bounce off of here. If not, then, we could possibly break 417. I have 411.05 on here. And then down here, 404, 403 area. And then down here at the bottom of our red, it's 397. Possibly we go down that low if the market continues to sell off, because we are just at the edge of our zone. And this next zone is very large. So we'll see if we can pop up and hold it. My guess is the market could try to dump and show that, make everybody think it's going down. And then also you get possibly a short-term, at least relief rally up. So just watch for that tomorrow. There could be a little fake out. But if we open up and the market tomorrow is down below this 420 level, it could, come down to this, 417. If it's broken that, it's probably 411 would be next on my my list as far as possibly an area supports 411, 412. So looking at the market, pre-market, definitely check it. Look at the VIX. If it's below 32, there's a possibility that the market could, be flat tomorrow or, pull up a little bit. If it's below 25, we definitely could see a nice little pop on the SPY tomorrow. But if not, if it's above 32 or still elevated, we could very well come down to 411. If it breaks down, 405, 404 could be the next area of support. So just be careful out there. Triple Qs, same thing. We're below the line. We're actually in this blue zone. So we broke our lower trend line. We broke support, and we're kind of in this land here. So we could come down to 312 would be the next support area in this next band. So if we bounce back above this 334.15, then we can rally back into these upper zones. And we have resistance here, at our trend line at 336 and then 340. So watch for tomorrow to give us some direction on this. Semiconductors right at the bottom of this band. Next band down takes us to low 249. So looking for semiconductors to see if the semiconductors can hold us and bounce off of here. Dow Jones, DIA. So Dow Jones ETF, we're right at the bottom of this line here, 331. If we break this line, we very well could work our way down to 314.69. That's this next band, and it's pretty large. If we bounce off of this, we have resistance at 335, and then we have resistance at 337, but we could possibly rally back up in these zones. But if not, if we're below in this zone, just be careful because this is a pretty large area. So that means you're probably going to see a lot of volatility. IWM. So IWM, we're down here at the bottom of this band. And if we break this band, now 188, 187 would be the next area of support. But we are below our trend lines. So we're kind of getting to an area. If we break this zone down here at this 188 level, now we're in this big area right here. So the low on here is 175. So definitely looking for support in these upper bands. And hopefully this will help you. Hopefully this helps you see kind of why some people use Fibonacci, because it shows how much the stock is retracing. Once it retraces all the way 100% of its last moves, then you get into this area where it's a larger zone and more volatility, more risk, and more downside, and a lot more retracement of the stock. And then you have to go back and look at the weekly charts and the monthly charts to find areas of support, because daily is not giving it to you anymore. So just something to be aware of on these charts here. Financials pull back as well. Next support in this band is 37.83. We were there back here in January. We were back there in December of last year as well. So this should be an area of support down here. If we do break this next band at 33.79, but we are in this zone now. We got to get back above, 38.60 if we want to get back in there. And we are still in the bands here, and we're actually above the 200 still. So just something to be aware of. So we still our financials could bounce off of here. This is a pretty big breakdown candle, so maybe retrace back again on this one. But the market's kind of working together now. It's kind of going the same direction. So just gotta be careful out there. Energy. So here's the zone we're in on energy. So the bottom of the zone is 66.17. And the top of it's 760 if we want to break out into new areas. And you can see we've tried doing that before. But this is a huge pullback. We're down towards the bottom of this band. So just see if we can get support off here and bounce off of here. Or at least stay in here and consolidate and hopefully break above that. So energy, that's where I said energy is kind of the one holding on. It's still, above most of its moving averages. It's above the 20, the 50, the 100, and the 200. So that's where energy is kind of shining right now. Healthcare just broke below and closed below the 50. So it's in this, it's coming down this lower band, which, ends at 124.16. If we break that, then we can come down to our trend line here and also the 100 around 118. If we break that, this is the next zone. And then you see if we break this zone, around 112.95. Now you got a larger zone. So that's where you want to see if we maintain up in these areas and bounce off of here and get support and stay above these moving averages so that we can, stay in a more strong area where we don't have this weakness. And it definitely, we're getting close to the bear market across the board. XOK, so our technology ETF. So technology ETF, we just broke below our trend line. We're going towards the bottom of the zone, which is 146.23. If we break that, we got a long way down here to 135.25. So really looking for us to kind of bounce back, hopefully into our trend area, and bounce off here. We're close to this double bottom here at 146.24. So if we bounce off of here, that's great. We can get back up into our upper zones. If not, we could have a long way down. So looking for that technology to bounce with the rest of the market. So Bitcoin, big sell-off. It broke all through all the bands. So it's lower 36, 400 was kind of the low of this band. You see we were down here down to 32,950 before. Do we find support down there? Now, hopefully, that would be great for Bitcoin if it could find support down there. But you see this big area here, just nice wide open. So there's a large area that it could drop before it finds support. So we'll see if it can bounce off here. Maybe this becomes a double bottom for it. But right now, Bitcoin is, falling with the rest of the market, and we're below the bands. So we'll see where we can find support on Bitcoin, but that's kind of where Bitcoin's at, kind of right in the middle of this range. GALA, so this is our crypto Galaxy Entertainment. So this one, you can see here, we're just in this little area right up here. So in this little green zone, kind of consolidating. So at least it's holding on. Definitely want to make sure we don't get below 46.26. And we also, if we can break back above 48.03, we could go back towards this high. If we break this high, then, we can go up in these upper zones, which you can see is, kind of open. Crow, as you can see here, descending triangle, you see that we're coming down here. So hopefully we can find a double bottom here around 32.50. And get a bounce off of here, and maybe we kind of bounce through here until we get towards the end of this triangle. But we've hit it up here, and we just come and working slowly our way back down. So we are in this downward slope below all the moving averages and into this new zone. If we break this zone, then we have we come down here where we kind of just started around this 25-cent range, and there's their zone that goes down to here to 19-18 cents, and then from here, it's kind of unknown territory. So hopefully we can bounce off of here. So, but that's our cryptos. That's Fibonacci. We covered our training as well in more detail, but just throwing it on here, like some feedback. Does this help you to kind of see where the zones are and the ranges? That's kind of where we come up with our price ranges when we're going through these videos. A lot of times is looking at kind of the areas of support and resistance that the stock's been in, and Fibonacci is a way to be able to visually see it. And I do the colors. Some people just do lines. I like the colors because I'm more of a visual person that way. But hopefully this was helpful for you. Stay safe out there. Continue to subscribe and to share these videos with others. And hopefully you'll stay safe out there. Looking for possibly more downside tomorrow. If we are below yesterday's close, look for more downside. If we can break back above yesterday's close, then maybe we get a little bit of relief rally for the week. The other thing to keep in mind is this week, we're getting close to the end of the week and the end of the month. And so where do we close the end of the week and the month is going to tell us possibly where our next month in March is going to be. If we close on the lows, that means we're showing a bearish sign, and that means more likely we're going to be going, further down. If we can close up a little bit and try to recover, then at least we show the bulls have come back out to play, and maybe March is a better month. So really looking at, this next couple of days and Monday, which is the last of our day of our month, to see where the market's going to show us, where does it want to be? Does it want to be in a bear market, or do we want to start to try to rally back up and get back to a bull market? So looking really close the next few days. Rolly's going to tell us a lot. If you're nervous about playing in the market, just stay on the sideline. Cash is a position, so just stay on the sidelines until the market finds a clear direction. Because right now it's very volatile out there, and we could have large swings in both directions, especially if the bears bulls come back into play. Because right now the bears are winning. So be careful out there, stay safe, and we'll talk tomorrow night.